Transferring your tax residency to a beneficial country like Paraguay definitely offers great advantages. But if you don't do it correctly, it also involves big risks. The main risks here are obviously two. The first is that the tax authority of your country of origin or another country contests your tax residency in Paraguay and tells you that you are still their tax resident, demanding not only tax payments but probably even sanctions and fines. The second risk is that your bank accounts may be closed or frozen. So today we'll discuss how to avoid problems with your country of origin and its tax authority, and in the next video we'll take a look at how to avoid problems with bank accounts. So subscribe to the channel so you don't miss it. The most common mistake people who contact us make is thinking that to avoid problems with their country of origin, it is just sufficient not to spend more than 183 days in the national territory. And bear in mind, this is true, and it's true for practically all countries in the world, but it's not enough. For 99% of the countries, the rule is that to legitimately move your tax residency, you must demonstrate that you have strong ties with the country where you have transferred your tax residency, and that this country has now become the place where you have the center of your interests. The two key words in all our discussions are substance and ties. You must try to build substance in the country where you are transferring your tax residency and remove substance from the country that you are leaving. And how do you do that? You do it by building ties with the new country and at the same time cutting ties with the previous country. Let's start with things to do to cut ties with the country of origin. Well, the first tie that needs to be considered is definitely the home that you had in the country you're leaving. A home for tax purposes is a domicile, so a place where you can habitually reside. Long-term lease, ownership, doesn't matter. And this is a very strong tie, so it's the first thing to optimize. If you live in a house you own, the best thing to do is to either put it up for sale or for rent. If you have a house abroad but you're renting it out, it's not a problem in any way, because what matters is that you don't have the possibility to reside, as we said, habitually in this dwelling. The second very strong tie is family relationships, especially two: dependent children and your spouse. If you move your tax residency to Paraguay or another country X, but your spouse does not do the same, this will immediately attract the attention of the tax authority. No control by someone working at the tax authority is even necessary. Think about it. It's a control that can be done entirely automatically, since your data is in the tax authority's database and it's super easy to process. At that point, you really need to make sure you have very strong ties with the country where you're transferring your tax residency. We're talking stuff like you really live there much more than you live in your country of origin, and you only have economic ties with the country that you have transferred your tax residency to. Okay, the solution to all of this is quite straightforward. It's just to move the tax residency not only for yourself, but for the entire family. And for each of them, make sure to build substance in the new country. And the third tie is business relationships, which can actually mean several things. If you have an online business or one that's easily transferable to another country, while you're at it, it's better to transfer the headquarters abroad, so to cut one more tie. All the better if, while you do it, you also manage to save on corporate tax because you transferred the company to a place that fiscally treats you better than the previous one. Another tie that's connected to the business sphere is clients, on which each country actually has a different philosophy. For the more aggressive tax countries, Ireland, Italy, Spain, having clients in your country of origin weighs on the ties you have. However, if this is the only tie you have, there isn't a place in the world that will contest your tax residency just for this reason alone. Let's say that it's more like a secondary tie, and in presence of other strong ties to your country of origin or weak ties with your new country, it can weigh significantly. Going forward, having a car owned in the country of origin is another tie that indicates the intention to spend there a lot of time, and probably to still have a lot of substance in that country. Sell it. If you absolutely don't want to sell it, perhaps because you have a particular emotional attachment to the car or whatever, at least sell it to a family member, so that on paper at least the ownership is not registered to you personally. And lastly, Another quite important tie are bank accounts, investment accounts, and all those financial services that we leave tied to the address of our original country. Often I realize that there are many people who don't know that they need to change the address within all their bank accounts before they can claim themselves completely out of it. An account legitimately cleared as for non-residents does not represent an important tie with the country, precisely because we are clearly and transparently telling the bank, hey, I'm not resident there anymore, my address has changed, my tax residency is now different, but I want to leave my account open. But if you leave your bank accounts with the address from the country where you come from, that's a serious problem, because then the banks will report those movements to the tax authority of your old country of residency and tell them that as long as they're concerned, you're still domiciled there. So this is a problem that can also cause issues with the bank account itself, but that's gonna be for next week. How to go at it? Easy. After notifying the competent authorities that you have left, just remember to change the tax residency in all the accounts you have on bank accounts, cryptocurrency exchanges, brokers you use for investing, and all those fintech services like PayPal and similar, right? Now, let's see instead how you can create substance in the country where you decide to transfer your tax residence. In our specific case, of course, we will talk about Paraguay, but it's fairly a general speech. The three essential steps to follow are always the same. First, get a residency, whether temporary or permanent, and get the identity card, the cédula. Then, open the RUC as to be considered a tax resident by Paraguay, and therefore have the tax residency certificate and the certificado of cumplimiento tributario, which we can translate to the tax compliance certificate. I like to call it that way. And then, third important point, have an address that you can use in Paraguay for your bank accounts to register the beneficial ownership of your LLCs and where you can receive correspondence and so on. If you don't want to buy a house or sign a long-term agreement in Paraguay, you can use our concierge service, for instance, but the important thing is you have an address you can really rely on. These three steps are those that, in my opinion, cannot be missing, because they are needed to build all that paper trail that is normally required by any tax authority when verifying the authenticity of a person's tax residence. Regarding the RUC, we always recommend also having some activity within it and not just leaving it empty with zero declarations, as many expats have done, especially in the past. That said, there are less important ties, but which can still help to build substance in your new country of residence. Two above all are having a bank account and a local SIM card. The same is also useful for two-factor authentications, because in a lot of contexts where you can only use a phone number linked to your country of residency, having that could be very useful. Something that is becoming quite common, especially among banks and cryptocurrency exchanges, so I would generally suggest to get at least an eSIM that you can activate with roaming even when you're abroad. Another thing that could help to strengthen the relationships with Paraguay is to donate to charities to demonstrate your attachment and interest in the society of the country. Even just giving a small regular contribution to a charitable activity can help a lot in case there should come an audit to demonstrate that you have substance in Paraguay. Now, suppose that you are a person who wants to absolutely run zero risks and be 100% sure of not wanting to have any problems with your country of origin. There is something else you could do to add a very strong tie with Paraguay and dispel any doubts regarding your tax residence, and that is spend more days in Paraguay compared to those you spend in your country of origin. This is not a necessary requirement in most countries. Only some, like Spain, clearly demand that you do this thing, while others simply will take it into consideration when you weigh the authenticity of a person's tax residence. But if you don't want to go to that extreme, it's simply obvious that the best way to create substance in a new country is just to spend time there. And just the same way, the best way to remove substance from your country of origin is precisely to spend as little time there as possible. So even if you don't want to go to extremes, I would definitely not play with the rule of the 183 days. So I would strongly not suggest to stay 170 days a year in your country of origin without ever setting foot in Paraguay. It's obvious that if you do so, you will attract the attention, and in the case of checks, it will be extremely difficult to show or pretend that the center of your economic and social interests is Paraguay. So if you spend very little time or you're never in Paraguay, also make sure to spend very little time in your country of origin or not to set foot there. In other countries outside of your country of origin, where you enter as a tourist, that is not a problem. It is really just your country of previous residency that can cause problems in case you spend a lot of time outside your new country of residency. So take that in mind. With this video, I hope I've helped you understand what it means to give substance to your tax residency and how to best manage both ties with your country of origin and with Paraguay. I remind you that to obtain residency in Paraguay, you can contact us at the contact details you will find in the description of this video. As always, from Asunción, it is all for today. See you in Paraguay.